All right, we, of course, though, are starting with some breaking news, and this time it's out of Wall Street. U.S. stocks taking a nosedive. Moments ago, the Dow Jones closing more than 1,000 points lower after the Federal Reserve announced it will cut interest rates for the third time since September. Now, this move pushes the Fed's rate down by a quarter point as it looks to provide some relief here for borrowers. Now, despite a sticky inflation rate that's hovering well above the central bank's long-term target. So for more on this and to explain it all, we bring in ABC's Elizabeth Schulze, who's been following this all day long. So numbers are finally out here that we're seeing, Elizabeth. Why are investors reacting this way to the Fed's decision? And what does this mean here for the U.S. economy?
Yeah, a lot of red on Wall Street, Kana. That more than 1,000-point drop in the Dow. That's about 2.5% lower, and you're seeing even bigger losses at the close here in the S&P 500 and the NASDAQ, too. I've been texting with some traders who are saying this is all about the reality, Kana, that, yes, the Fed did deliver on that quarter-point interest rate cut as expected today, but looking ahead into next year, and as we know, the markets are forward-looking, the Fed is now projecting fewer rate cuts next year, and the reason for that is that inflation progress has stalled. Remember, the reason why the Fed was able to start bringing down those borrowing costs is because inflation was getting close to its 2% target. Well, in recent months, we have seen some of that progress slowing. And I actually had a chance, Kana, in the press conference just a couple of minutes ago with Fed Chair Jerome Powell to ask, why is it that inflation is proving to be a little bit more stubborn than you expected? Why do you think it is that inflation is proving to be more stubborn than you'd expected?
So now we have inflation itself is way down, but people are still feeling high prices. And that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there so that their wages are going up, their compensation is going up faster than inflation year upon year upon year.
So the takeaway here, Kana, both for investors on Wall Street and for households and businesses that are borrowing money, you might see a little bit higher borrowing costs now for longer. The Fed wants to wait and see what the economic data looks like. They're not going to be as aggressively lowering interest rates as they have over the past couple of meetings. Investors not taking a lot of comfort in that news. They see a little bit concerned that the Fed maybe is a little bit more worried about inflation. They're a little bit more worried about the path about the economy, though I will say I did ask Jay Powell, what do you think about the economy next year? What do you see as the biggest challenge, especially under a new administration and some of the policies that could hurt growth, like tariffs? He said he sees everything as good right now. He is very optimistic, Powell told me, about a good year next year, Kana.
All right, we can certainly hope. All right, Elizabeth Schulze, always good to have you with us. Thank you.